we have Gurmeet Chadha, who's also joined us on the show, who's a managing partner and fund manager at Complete Circle Consultants. A very good afternoon to you both, gentlemen. And Naresh, let me come first to you. Divergent moves is what we are seeing after a while actually on the benchmark indices and the Nifty Bank. Where do you think either of them are headed at this point in time?
So overall, the bias is positive. What we've seen is in the last 3, 4 sessions, we've been trying to form a base around this 24,700 to 25,000 mark. And in that period, we are seeing a rotation. So today is pharma and IT, which is taking a backseat, which were the real movers over the last many months. Yesterday was almost a new all-time high on pharma index, and it has pulled back. So it looks like a false breakout out there. But at the same time, you started seeing outperformance come back to Bank Nifty after quite some time. Today is one of those days where Bank Nifty is outperforming Nifty. So seems like a rotational bounce could be in play for the banking space going forward.
Rotational bounce seems to be at play for at least when you talk about the banking sector. But coming to you, Gurmeet, what's your take then? Do you think this rotational bounce will sustain, or do you think that the banks will garner or get back their mojo, and that's where the leadership will lie when the markets actually, after this consolidatory phase, goes back into the rally phase?
I think some rotation is due to financials. I think the change of stance by RBI, would follow with the rate cut. And once the first rate cut happens, I think the market will then discount that, you'll have maybe 75 basis rate cut or 1% rate cut. It may not be a very long rate cut cycle, it would be a much shallower rate cut cycle. And I think that's when it will get priced in. But I think now it's a question of when. It's not a question we can debate whether they will do it in December or early first quarter, which is around February, but that's going to happen. I think PSU banks might see a bit of a comeback. The valuations have been very reasonable. In fact, if you see the bank Nifty, you'll find a lot of banks which are at 14, 15 times earnings, one price to book, and good ROEs between 14 to 18%. You never get this kind of pricing in a raging bull market like this. So I think that rotation will have. We saw that with IT 6 months back when it was completely out of favor. So some rotators do. Also, I think the action will now start shift to stocks from index. I think we've had a very broad rally. So some consolidation is due and should happen. And now the action will shift to earnings and stock specific. So I think now the focus has to be wherever there is earning growth, we've got to be anchored to that. There is some softness in few pockets, like the government spending has been very slow in the first 6 months. If you see road expenditure, you see defense expenditure, they are undershooting. So that could reflect in the earnings. So, and we have a festive season beginning. So I think my sense is the action would be more stock wise from here on.
Right, so the action will be more stock specific rather than sector specific going ahead. And yes, you are bound to see some sort of a sector rotation take place. But on that note, we'll slip into a break on this edition of Closing Trace. When we come back, we'll discuss more about the markets with our experts. Don't go anywhere.
Welcome back. Well, the market is holding all right. We are at least in the green for what it's worth. We are around that 25,000 mark, and that's where we've been for a long time now. In fact, Nifty Bank is the one which is outperforming, all thanks to that big move coming in on Kotak Mahindra Bank. That stock is up over 4% right now. HDFC Bank is also powering ahead with almost a 2% move coming in. So it's clearly banking all the way. Axis Bank, Indices Bank, these are the ones which are doing quite well. What's under the weather clearly is pharma. So a Lupin will come up for you on the screen. That one is down in the trading session. Not just that, Cipla is also under the weather. Torrent Pharma, Concord Biotech, Alembic Pharma, Alchem Labs. Pick up any of these names from the pharma sector. They are down anywhere between 3 to 7% right now. But we also got the ANFI data today, and it does look like the flow of SIP flows has moderated a bit. The equity inflows, if you look at it, the total figure which is coming is around 34,000 odd crores, and that compares with 38,000 crore that we had seen in the month gone by. Gurmeet, does that give you a bit of a sense that there is moderation in SIP flows? And I ask you that because what's holding the market right now is purely DIIs, and this morning Bernstein also wrote a note downgrading India, saying that they are experiencing or they are expecting the SIP flows to moderate. What happens to the market strength in that case?
Anisha, the moderation is a few hundred crores here and there. We are almost at $3 billion gross. The net flow is 50% of it because a lot of money also gets moved out. So this number is gross, so the net figure could be 11,000-12,000 crores. So while it is important that it gives you incremental liquidity, but that's not the only factor. Also, mutual funds have a category called balance advantage fund and multi-asset fund, where equity levels basically go down when markets go up, and on corrections they increase. So it's managed on a dynamic basis. That category is now upwards of 3 lakh crores. So that holds a lot of cash in form of bonds and arbitrage, etc. And then you have a lot of funds which are sitting on some cash. So the overall cash position is pretty healthy and not just only dependent on SIP flows. And you can have a slightly month-on-month moderation, but in general, there is a structural uptrend. I just met a few new age companies like Growth and some people which are using digital platform. They are adding almost a couple of lakh customers every month in terms of lower ticket SIP. So this trend is now picking up in tier 2, tier 3. And I really don't see that as a trend. One off month, a few hundred crores here and there doesn't make much of a difference.
Okay, so financialization of savings is a long-term trend and you're not worried about the month-on-month trends. But Kunal, are you worried about the underperformance of pharma today? What's wrong with Lupin?
Yeah, I think there's some bit of profit booking coming across the board for many of these high performing sectors over the last 3-4 months. For example, pharma and FMCG, these were the two spaces which have done pretty well for themselves. Lupin has gone through a correction from 2300 towards 2150 where it's trading right now, but it still looks like that the stock is into a strong multi-month, multi-year uptrend. Maybe I think after this correction and since it's on the back of much higher volumes, you might see the stock dragging a bit for another couple of trading sessions further. So expecting the stock to maybe come back towards 2080, 2120 odd zone. So this could be a zone where I would probably believe that the selling pressure should abate and the stock may come back into a bounce.
All right, so that's a take coming in on Lupin or also the pharma index under pressure in trade today. One pocket that's looking pretty bright in trade, it has to be the PSU sector that is actually holding on. Oh, it's actually given up gains right now from those morning highs. The PSU index is now actually seeing gains of about 0.5% or so. It is the auto index also that is mildly in the positive territory. One quick note is the fact that the markets have given up those gains coming in. You have Nifty that is at the flat line as we speak. Is the IT index that's under pressure right now, 1% lower coming in for the IT index. And Gurmeet, what's your analysis or what have you penciled in for the IT index or the IT sector in the quarterly earnings that they are going to be releasing as early as today?
So, I think there could be some near-term support due to NASDAQ and the move in NASDAQ because there's a high correlation between NASDAQ and Accenture numbers were actually pretty decent, and that led to some strength in IT. Despite the fall in the market, the IT stock did not see that much correction. But with earnings season starting, I think the market will get differentiated because if you still forecast flat growth or very low single-digit growth, the stocks are trading at 25-30 times, so it's not that they're very cheap, but yes, because of high cash levels, high ROEs, and being such an asset light business, these are like pharma, like FMCG, safer bets in turbulent times like this. So we are constructive on in large cap on TCS and HCL Tech. Then we also have KPIT Technologies. The stock has consolidated now for almost 6 months in this 16-1800 band. It's in auto software. It's in the band which we call as CASE, which is connected, autonomous, shared, electric. And if you speak to global OEMs, the ERD budget and the software budget for car, there has been no moderation. And then we have some of the niche names, which are there in this space. So we are very selective in terms of what we have in IT. Painting everything with the same brush that entire IT is looking good, I think may not be the correct thing to do.
TCS is trending a bit lower. However, we started the day in the green. Now it's moved into the red. The expectation is it's going to be a decent quarter, 1.1% kind of top line growth. The deal when expected $8 to $10 billion and the margin expected to improve a bit. In the meantime, I stand a bit corrected, Gurmeet, because the SIP number has come in and no, there's no moderation on that. Even though the overall equity inflow has tapered a bit, the monthly SIP figure has come in at 24,500 and that compares with 23,500. So there's actually an improvement of 1,000 crores on a month-on-month basis. Record high level yet again. In fact, we surpassed 24,000 mark for the first time. Gurmeet, the Tata Group itself is something which has touched everyone's life in one way or the other, and even at the shareholder level, if you're stakeholder in that respect, it's definitely rewarded you. What's your reading of Tata Group from here on?
It's not only been a great wealth creator, but they have been true, statesmen in terms of, building the nation, showing compassion, doing, whatever they do, and standing for values. And this is what you want in life, Anisha. This is the best IRR you generate on your life portfolio. Everybody, missing and feeling it's like a personal loss to everyone. I think Tata portfolio continues to do well. We are invested in Tata Consumer. We have Titan in the portfolio. We have TCS. We had Tejas Networks. So I would probably have, like about maybe 25% exposure of my 100 rupees in Tata. I think continues to do well. I think they are taking a lot of strides in semiconductors now in Tata Electronics. A lot of work happening on electronic manufacturing in terms of JV, on making iPhones and other stuff, and some great work happening even on new energy. With initiatives under Tata Power and others. So I think the new age themes, which is clean energy, semiconductors, electronic manufacturing, I think Tata will be at the forefront. They anyways have dominated IT, retail, consumer brands, etc. So I see them pouring into these, new themes as well. And I think they'll be, and I think that's probably the one of the largest group as we head into a $10 trillion economy.
All right. Thank you so much for that, Gurmeet, for joining us on the show to give us your take on the markets as well as sharing life lessons as well that Mr. Tata left us.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.